Mr. Gbenga is the managing partner and a person of significant control at Silver Oak Partners Limited, a Lagos-based structured finance, alternative investment, and advisory firm. Under his leadership, Silver Oak Partners focuses on delivering strategic financial solutions across key sectors in Nigeria and broader African markets, including Ghana, Ivory Coast, Algeria, and Togo. The firm specializes in several high impact industries, including one, energy and infrastructure, technology and finance, production, that's agriculture, agribusiness, then logistics, as well as real estate. Mr. Benga leads the firm's efforts in debt financing and alternative investments, often targeting large scale ticket sizes for regional projects. His work involves navigating the dual source Africa ecosystem, where the firm is recognized for its capacity to handle significant investment portfolios and provide advisory services to enterprises looking to scale within the continent. Ladies and gentlemen, please welcome, put hands together as we invite to the stage Mr. Gbenga. All right, joining us.
Thank you.
And yeah, welcome to Autolin, the money room. Now, we have several questions for you. I prepared several questions for you, and we are starting very, very strong. So, my first question, in Nigeria today, what does a resilient portfolio look like? Because the theme is building a resilient portfolio, an investment portfolio. So, in Nigeria today, we have seen the dollar fluctuations, we have seen several things happen, the movements in the Nigerian stock exchange. What does a resilient portfolio look like?
Okay, I'd say thank you for having me. Thank you, and that was quite a bit of an intro.
We try our best.
I wasn't expecting you to say all of that though. Um, Honestly, a resilient portfolio will be one that is diversified. To be honest, as simple as it sounds. Let's not dip it. More often than not, we get to see people that focus more on yield, interest rates, of course, the interest they get from an investment, and if it feels too good to be true, or if it's actually seems too good to be true, there's that risk of concentrating all of your wealth into one basket. So a resilient portfolio is one that is diversified enough to withstand the volatility of a market, as simple as it sounds.
Okay, so let's quickly double click on diversified. So, can you list some asset classes that could make a good diversified portfolio?
Okay. Typically, it's just having the word diversified just means you have different
Yeah.
asset class. There's the common, the normal ones that you mentioned, equity, which is also stock. There is bonds. There is T-bills. There is a rising issuance of CPs. I don't know if you guys have heard.
Yeah, commercial paper.
Commercial papers. I think it started last year. People are starting to list CPs on NGX. It was usually private
Yeah.
deals before, but nowadays you get to see CPs, which is strictly debt. So I would say, depending, I wouldn't want to fix or box our minds on what is, because largely investments, in as much as it's science, right, and it's a numbers game, you have to be very creative. So I might say one thing now, and your reality, or whatever it is you have access to, might not play out to what I just said, right? So it still depends. Equities, and that you are investing in equities doesn't mean it's gonna. Equities is just like forex, it can go up and it can come down. So have lots of bonds, which is state bonds, FGN bonds, and the rest. They are low risk. Your capital return of capital is guaranteed.
Yeah.
CPs, which is more like corporates raising debts, right? So you already know where your money is tied to, what company is taking your money, right? And there are also companies that also rate these issuers,
Yeah.
right? Or these people looking to raise bond, whether it is states,
Yeah.
whether it is a corporate. So um, the onus would be on you whilst you're investing on those kind of investments, right? In as much as you'd have to conduct due diligence on if it's a CP you're investing in, what company is taking this CP? What's the use of the CP? Would I get my money back? And there are also issuer rating agencies
Yeah.
that they give ratings, and you just know, okay, whether my money is safe or not, right? So bonds, CPs, T bills, which is usually short-lived,
Yeah.
1 year, and stocks. Yeah, stocks typically. Yeah.
Awesome. Talking about building a diversified portfolio, I have this question. It matters to me, and I believe the audience as well. What do you think is the minimum amount an individual should have before looking at investments?
That's quite a question. I would tweak the question to, um, do you even have enough inflow to start with? So we can get too excited, and focus on how we want to get something now. Now, minimum, okay, 500, minimum 1,000. Okay, I say 10 million. The real question is, do you have inflows that can help you think well? Because at the end of the day, your investment strategy or your investment thesis should be goal oriented. You said something. I don't know if it's you that said something. Okay, I think I heard it. One of the mistakes that one of the mistakes that people have,
Yeah.
investors have, especially millennials, young our generation, we just want it now. Now we just want it to be too certain and whatnot and whatnot. So, yeah, typically that's what I would say.
Awesome. So inflow is very important. Not really about the amount,
Nah.
but does it keep coming in so
Does
it
it keep
keeps
coming
funding
in?
your
Yeah,
portfolio?
yeah. Does it keep coming in? How much comes in? Can I scale this? Can I, there's a lot of questions, there's a lot of answers that you can get from how much do I get first, me myself, before I start giving my money to anybody. Am
Okay.
I even and investment is more psychological, right? If you have not eaten, yeah, that's it. I'll go there. If you have not eaten, if you have not eaten, I don't know. If the investment is looking very promising, you would exit the investment. A promising investment, not problem. You would exit it because you're hungry. So at the end of the day, it's here. So first of all, before we start talking about how much do you have to invest, do you even have enough? Have you eaten this morning? Do you have enough to? Let's just even start from that. What is even going on with your finances? Are you eating? Are you thinking? Because if you are eating, you are thinking.
Yeah.
Yes. Now, then we now go to investment, because that, in as much as we do not talk about it enough, your mental and your psychological health is plays a huge role. If not is the if it's not that it's the only holy grail to having like a good investment, your psyche is very key. Yeah, and it goes beyond that.
We'll revert back to that because that's interesting. I really didn't see investment as a psychological stuff. I mainly see it as maybe skill and a knowledge stuff. So I'm going to come back to that to talk a little bit about what correct psychology do we need to be good investors. But before that, if you're starting from the scratch, what are the steps they are going to take to build a resilient portfolio?
That's good. I just said it. You need to know first of all, before we talk about investment. Show to Joan. Sorry if you're if you are show to Joan. Have you eaten? Like, have you really eaten? What's going on? Do you have enough? Do you have, before we even go to savings? Do you even have emergency funds? Do you have funds that you can even run around? Do you have? Are you liquid? Right. So that's the first
So,
question.
one, liquidity.
Liquidity. Right. Secondly, I would say you have to conduct like your own due diligence on what's on the state of the client that you're investing in, and I'll break that down. If you're using um, um, if you're if you're going to be investing in Nigeria, for example, yeah, Nigeria is highly inflationary, right? And first off, Naira is always depreciating per second. So what's your game like, right? What's the game like? How are you? What's your net? I'll call it net value, net value like. So what you can what's Naira going to be at the end of the year, based on what the metrics released by the government. I think they just released some metrics
Yeah.
on MPR,
Yeah.
monetary policy. So yes, whilst you work on your inflow, second, you need to be savvy enough to know what it is going on in the investment landscape. You need to be savvy enough, even though you want to outsource your the investment management, you want to outsource it and whatnot, you need to be savvy enough to know what climb, what territory you're working with, what asset class, and if there's any, after you have been savvy, if there's any that you should jump on first, it will be foolhardy of anyone to invest in an illiquid type of investment. It doesn't make any sense. You are having you're still working on getting yourself afloat, and you're investing in a real estate. You are buying land at somewhere that we know that in the next 10 years it would appreciate. Yes,
But
it's a good
nobody is
investment,
buying.
but the real question is, would you still be alive in the next 10 years? So yes, you need to the first investment or first asset class you need to focus on would be an investment that is liquid. So stocks, yes, which is stocks. So in as much as it's stocks, it still doesn't mean that you just would invest in any stock. Because I see most people, because the company is doing, the company has good branding.
Numbers. Yeah.
Good branding doesn't mean it will surge on the Nigerian stock
Yeah.
exchange. That it has, for example, e-transact. And I'm saying e-transact because my wife she picked e-transact yesterday.
Oh.
Do you understand? So e-transact is a good company. If you check
Yeah.
e-transact, everything is good, is good, is good. But the real question is, will they surge? They have good branding. They are doing well. Do you understand? They are paying their staff salary. Okay, is that enough reason for you to, because they are stable? They have been stable. They are probably just they process almost all the local
Yeah.
payments in Nigeria. E-transact almost all the
Yeah.
Verve card transaction. E-transact processes it. So yes, they might have money, but is that reason enough for you to invest? I'm just even putting that out hypothetically. So my point exactly is, you need to be savvy enough to know what exactly you're doing, what you're doing. If you're going to be investing, start with an investment with an asset class that is liquid. Stocks is a good point, is a good point
Entry.
to entry point. But yet again, you need to conduct due diligence on what kinds of stock to invest in.
Amazing.
Yes.
Awesome. So I picked up some things from what you just mentioned. One, liquidity, obviously.
Yeah.
Then two is investment knowledge, quite important. And sometimes people want to outsource that. I have liquidity, someone should invest for me. And you are saying, oh, that might not really be the best decision most times. It's good if you have this knowledge yourself. And you've even gone further to mention some asset class that someone can consider starting with.
Yeah.
And there is also one important thing you did mention, which is considering liquid versus illiquid stocks. And one funny thing is, a lot of people that buy real estate don't know that it's an illiquid
Type of
investment.
yeah.
So I think that's a very important one that everyone listening should actually pick out. Sometimes, even some stocks in the stock market, there might not be a lot of movement. If you buy a lot, there might not be sellers for you to exit your position.
True.
So I think that's important thing. I don't actively think about that during investment, and I know a lot of my friends, too, and maybe people listening, don't actively think, okay, yeah, this is gonna give you the returns you want, but are you not gonna get a buyer where you want to sell, particularly real estate, or would you now sell at a discount because you didn't get a buyer? Awesome. So we're gonna now. I have a question in terms of stock, right? Can you give us three metrics to look out for a potentially good stock? I know it's not written anywhere, but from experience, what are the three things I can see while analyzing? Or maybe not just three metrics. What should we look out for when picking out a stock? What are the three things that we can look out for? Okay, is it this? Is it that? Is that? Yeah, just walk us through.
Yeah, that's a good one. And the reason why is that most of the questions you've been asking, though, have been very good. Um, Particularly this, if if any Tom, Dick, and Harry would want to answer this question, right? The person might quickly go into mentioning metrics like PE, price to earnings
Yeah.
ratio, all of those stuff. Man, crap.
Oh.
Yeah, crap.
For the benefit of the audience, can you explain what PE means for them?
Okay, PE means PE probably is just the stock price, the share price to the earnings of the company. So there's how they will divide it, and it just tells you if the company can pay you or if you would earn more from buying the stock. pretty much. And there are so many metrics. It's like I'm trying to remember off the top of my head, but quite frankly, to be honest, those metrics do not do justice enough to give you that go ahead to buy. From my own experience, if there's anything at all that has always worked year in, year out, is something I call inflection points.
Oh,
Right? So what are inflection points? Inflection points are more like macroeconomic wise. Wise by I mean what, where, why. Macroeconomic wise. So let's say hypothetically Seplat. Seplat probably just acquired one CNG model station, right? And there's this the president of the presidential administration of Nigeria, the current presidential administration of Nigeria, is pushing policies around CNG. Can you see that Seplat is looking like something that I can want to buy?
yeah.
Not because the PE is looking good, it's because, quite frankly, the main street is giving me what I want. Until you can match Wall Street to Main Street, forget all those PEs. So that is why at the end of the day, you need to conduct your is an assignment. The way we did assignment in secondary school is game like that. Is real game. Like you are researching and you are understanding why Seplat is a good deal. Why is Airs Energies a good deal? Is it because Tony Lumelu is the face of Airs Energy? Is that why? Okay, because Tony Lumelu seems to be the business tycoon in Africa.
Yeah.
That's why it looks like all
His
the
companies
subsidiaries
would do
in
well.
Airs holding, in Airs conglomerates will fly. It might, but it will be a fluke if it did. If it did, it will be a fluke. But the real question is, did you conduct your own due diligence? What about Airs holding is giving you that willpower to want to invest in them? You know, so so I said something about inflection points, the macroeconomic wise, right? So if I'm investing in Coca-Cola, for example, right? Why am I investing in Coca-Cola? Did something just happen in Nigeria that is something new happening? Yeah, that's what I'm saying. It's something new happening. So in as much as yes, there are good companies that blah 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 blah. That is why people avoid insider trading. That's the whole idea of avoiding insider trading. Insider trading is just so the executive, the boards of that company do not buy the shares of the
Yeah.
company.
Because
So
they have
if
those information.
exactly, so if I'm working in company for a company like Seplat, pardon me that I'm using Seplat as an example, but I'm working in Seplat and I know that okay, Seplat just acquired one CNG model station. They just acquired one flare gas station. I'm a director in the company and I already knew. You understand? It would be a crime that I went to invest
Yeah,
in Seplat.
yeah.
But guess what? These inflection points, to a layman, I don't even have to go to school
Yeah.
to know that you guys, I give you guys 2 years. The capex you have spent on acquiring this line of business would impact your bottom line.
Yeah.
If it will impact your bottom line, I'm definitely going to buy it. That's what it means. So I don't really advise people to check all those metrics. It's just inflection points. What are the inflection points around the company? Nvidia has been doing well not because it's a vibe.
Yeah.
It's because, quite frankly, there's just always something new going on with Nvidia.
Yeah.
Do you understand?
Yeah.
It's not because they're just a vibe. There is always something going on with Nvidia. That's why if you invest in Nvidia, it will grow. It's not because the owner is business. No, nobody gives a fuck about that, right? Pardon my French, but you get what I'm saying. So if the business is looking okay, there are new things going on. There are most likely or potentially new revenue lines. Yes, you're now wearing the hat of the board in that company.
Yeah.
Then you can invest. Pretty much.
Amazing.
Yeah.
I think that's very, very important and crucial because sometimes people that want to start investing are scared of the different matrix and calculation that goes into picking out a good stock. But you're saying we can really focus on the fundamentals, right? And when you say inflection point, to break it down, it really means what is a change that is happening that is going to change the direction or the game for the company.
Yeah.
And you use very amazing examples. If a company acquires a new asset, it typically means that they want to scale operations,
Yes.
which of course that purchase would affect the revenue in the next year. And I think it also affects perception
Yeah.
of overall investors, which means if I acquire a new asset, it means something is going on for me. I want to do something, and that perception will drive investors to push the stock up.
Yes.
So if I'm able to get in early, then I can profit of that.
Yeah.
Awesome, amazing. I hope we are getting what we are talking about, and new ways to pick out stock. I think I would look more into that. Now, one question. This is a very simple one. What's your favorite asset class and why?
What's my favorite asset class? Okay. Okay, how would I answer that? Okay, so I've garnered say at least 7 years cognate experience structuring deals. Yeah, and I'll tell you that the viability of an instrument or an asset class, it depends on how it is structured. So my point exactly is I don't have a favorite.
Okay.
I don't have a favorite. I just do my homework. If it looks good, because sometimes in this investment landscape, having a favorite asset class can be more of harm than good, right? So just knowing how or understanding the different frameworks or psychological and investment psychology, different investment psychology of the asset class. If you're going stock, is a different investment psychology. If I'm going private equity, is a different investment psychology. If I'm going real estate, is a different investment psychology. Because real estate is tangible, doesn't mean it necessarily can do better than an intangible asset. Do you understand where I'm coming from? So some people might just say, "Oh, I don't want." Okay, yeah, 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 I get it. You are risk averse. You like to touch your money. You buy real estate. But at the end of the day, if you want to ask yourself, is that a real? Is that really a profitable investment? If you're going to be taking into cognizance currency risk, market volatility risk, and at the end of your supposed exit, if we now weigh
Yeah.
the exit value
Outcome.
upon what vis-a-vis what the market is actually saying.
Yeah.
The real question is, have you really gained?
Yeah.
Do you understand? So really, there's really no. It depends. It still depends on. There's really no favorite asset class for me. I just do my own work. If I really want to put my mind to it, I do my homework, and I ensure that whatever it is I'm doing, I'm crossing the T's, I'm dotting the I's, and if it's not something that I'm understanding, I don't do it.
Pack your
I
bags.
just pack my bag. I just pack my bags and go.
Awesome.
Yeah.
Yeah. Just to expound on your points concerning, outcomes of investments and real estate particularly, and it also follows the macroeconomic environment of that
Yes.
particular real estate. And that's what people don't also realize. For example, maybe you bought a house 5 years ago and that house has 10x or 5x in value.
Yeah.
But assuming your money was in dollar, what was dollar saying then and what is dollar saying now? So that is essentially
Yes.
what you are saying.
Yes.
So actually look at
Yes.
it from that
Yes.
perspective. Amazing.
Yes.
Amazing. Now, talking about investment psychology, can you give maybe just one or two examples? Let's use the most popular ones. So for real estate, what is the investment psychology there? For stock, what is the investment psychology there? And maybe any other one you want to pick up.
That's good. That's good. That's good. That's good. That's good. That's good. So I'll start with real estate. People usually go about real estate very wrongly, right? And hopefully, hopefully, I hope there are apps, because I get to see different apps that allow for fractional investments,
Yes.
right? I got one that I'm working on. I have a friend that is working on one. My boss is working on one. Everybody's working on it.
something.
Yes. So my point exactly is, for a real estate investment, apart from the fact that, okay, when it gets to that point where we can all fractionally invest, which is still more like a hassle, if we're talking about capital intensive kind of investment, right? I would say investing in primed location can be overemphasized. It's like you buying. It's like you buying. You're supposed to buy the low, right? It's like you buying a high that will still go up,
Yeah.
but you are buying a high. It's good, but it's not really good. Do you understand? So, if for real estate investment, I would advise that you look out for suburb areas or locations that are maybe 20, 30, 1 hour away from the prime location. Because in no time, Yes.
Developments will move
Yeah,
it.
development will move. So yes, looking at a prime location might be, yes, you might see one or two good deals, but if you really want to wear the investment psychology, because you are coming from, it's called an opportunity. An opportunity is not something that is supposed to have been
Yeah,
stacked. An
yeah,
opportunity is
yeah.
something that looks
Undiscovered at the
undiscovered.
first point.
Exactly. So the whole point is, okay, I buy at this low and he appreciates, and I can do whatever it is I wish to do with it. And guess what? There might be a multiple or there might be a margin, depending. So for real estate, looking at prime locations, it still depends on your money though. But if you really want to make margin, because that's the whole idea of money.
Exactly.
You get me? Yeah.
Yeah.
If you have, you don't have to, you don't have to get the best stuff. Money. If you're talking about money or making money, you're talking about margin.
Arbitrage.
Yeah,
Exactly.
arbitrage.
Yeah.
So focusing on a prime location per se. Will you get your money? It might be nice, it might make your portfolio look very aesthetically pleasing, but really, are you making money? Right? So if you want to make money, locations close to prime locations, you buy it, and see how best to go for it. There's also called flipping. There's also something called
Yeah.
flipping.
Yeah. Yeah.
That's also like capital intensive for. But yet again, if you can, flipping is always it for real estate. If you have the money, don't even negotiate it. Just
Don't
flip.
buy and keep.
Don't
Flip.
just be flipping. Be
I think a
flipping.
lot of real estate companies
Don't
actually
don't
flip.
stress it. Oh,
Yeah.
just be flipping like that. Do you understand? Flipping is just buy a derelict apartment, blah blah blah, renovate it.
Yeah.
Do you understand?
Make the money.
Find other spaces that can increase revenue. So if it is say 100 square meter, if there's an extra, just increase it, flip it, cash out. That's what I would say about real estate. For stock, it's still the same psychology for stock, but this time you're looking for companies that are newly listed, companies that just went IPO, right? You do your own due diligence on those companies. If there'll be the next Dangote, if there'll be the next
MTN.
if there'll be the next everybody gets. So companies that just went IPO, companies that are doing follow-on IPOs, right? Yes, companies that are doing follow-on IPOs. Just look out for them so that you can invest and get a margin out of it. For venture capital, strictly is more like forex. Venture. I
I didn't
place
see that coming.
no, seriously. I place venture capital with forex and crypto.
Oh.
Yeah, they are very risky. Out of, if you have like a venture capital fund of say 20 deals, 20 solid companies though, solid companies. One is most likely do unicorn,
Yeah.
if at
Yeah.
all. If at all. So yes, venture capital focus more on the founder and the founding team than the app itself.
Yeah.
Yeah,
Definitely.
if there's anything, whether you're doing a safe investment,
Yeah.
pre-seed, seed, whatever it is you want to do, if you want to invest in a company, whether it's an SPV that they would say, okay, and an SPV allows for fractional investment, right? And that's one of the things I'd also encouraged companies to push, right? SPVs as opposed to funds. Funds is too limited
Big,
capital. It's
yeah.
too, SPVs that, Mr. On Red wants 1,000 naira. He's looking to raise 1,000 naira seed investment under an SPV limited company. I don't have 1,000 naira, but I have 20 people that can contribute 1,000 naira, right? So that kind of arrangement. If I want to now invest in this man, I would ensure that his company is not the only thing that would make me invest in his company, because it's venture capital, right? It's usually their early startup investment. So I would say, okay, this guy is the founder. What's his track record? Has he done something like this before? His team, what's his team looking like? Right? Then you can then go to the product. There's something called product market fit.
Yeah.
So whatever it is the product that is having, is the product meeting the demand or the needs of the market, or it's just looking very
Flashy.
very flashy. If you do you understand? So typically, for private equity is strictly is institutional
Big
investor,
guys.
big guys. So for T-bills is stable. Little or no investment research to be conducted.
Yeah.
is very safe. Your money is most likely going to come back. As a matter of fact, as you're investing in the T bills, they are giving you your interest
Yeah.
upfront. At the end of the year or at the end of the tenure, they give you your principal. So yes, T bills, bonds, typically they are
Yeah.
very
Same.
safe, very safe. So that's what I would have to say about that.
So just to double click and to also expound, SPVs means special purpose vehicles. So like you said, you want to raise the capital with your company, you can create a company from that your company as a special purpose. Use that new entity to raise capital. It could be for different share arrangements or for several kind of things. There's several ways of structuring it, but that's just like the
Yeah.
summary. And one other thing I picked out from talking about real estate is low key. That same inflection point you talked about in stocks also applies in real estate. So not just about prime locations, but where are places that something is happening that will most likely drive traffic to those
Yeah,
places.
yeah,
Because think
yeah,
about it, what real estate is not really about buying land and land going on. It's
yeah.
about movement of people. So where are people moving into and why are they moving
Or
into
where is
those
development
places?
moving into?
Exactly.
I'm sorry to cut in. An example is Bejuleki.
Exactly. I wanted to name
Bejuleki
that.
is okay. It's not developed now, but there is the seaport
Yeah.
there. There is the refinery there.
Refinery.
In next 10 years, we'll be talking about Bejuleki in another tone.
Yes.
You get so.
Awesome. That's why Ibejuga has been everywhere in real estate companies right now.
Yeah.
Because if you think about it logically, the the companies have thousands of employees, and they would live close to their office location. Like lastly, so awesome. That's an amazing to pick out there. Now, what was one bad decision you've seen inexperienced investors make every single time? What was one constant bad decision they always keep making?
It's not even in experience. I also make it too, and that is chasing returns and undermining risk. So we see an investment too good. Our head is talking about how much we'll get, as opposed to, is this actually really good? So yes, I see newbies make that mistake a lot. They chase returns and they just neglect understanding the risk, behind the asset class.
Okay, awesome. So that's like being too excited about an investment
Yeah,
or the possibility
or
of
yeah,
something working out.
or being too
Possibility of
impulsive.
something working out. Awesome. Now, what is one investment decision framework? I think you've talked about it already, which is about the inflection point. But
Yeah.
maybe if you want us to expand. So, what was one investment decision framework you find yourself applying often? And yeah, so what was one framework you've seen yourself applying kind of often in making investments?
You said it. Inflection points,
Inflection
that
points.
kind of psychology,
Yeah.
because the whole idea is I am um, I am buying into an asset, right? So if I am buying into something, and I'm applying the principle of price, because okay, so let me just permit me to go a little technical, right? If you're buying into an asset class, one of the first questions you ask yourself is, what's the underlying metrics? Is it price or is it yield? You see these two things I've just mentioned, it will help you as to understanding the inflection points, right? In terms of the MPR, the monetary policy ratio now is high. Inflation dropped to 15% from 17%. These are the things that as an investor, normal you should know. Inflation dropped from 15%, from 17% to 15%. The MPR dropped from 27% to 26.5
5, yeah.
by 50 basis
50
points,
points, yeah.
0.5%, right? So typically, what was I saying again?
You're talking about yield versus price.
Yes, yield versus price. So typically, you need to understand, what are you looking at? Is it bond? Is it treasury bills? Am I looking at yield? Because if I'm going to be buying into something, what basically are the metrics or the conditions around me buying into this yield? Right? What are the factors driving the rise and drop of a yield? So if I am thinking about T bills and bonds, is a different psychology from stocks because it's price, right? So how exactly does this inflection point, right? How does it drive the rise and fall of a yield if it is a yield asset class. If it is a price asset class, how does the inflation drive the rise and fall of the price? Right. So these are the framework that from there you just build around it.
Yeah. So for the listeners and me as well,
Yes.
can you quickly do a brief demonstration between yield and price? So what does it simply mean?
Okay, what does it simply mean? So it typically is just yield and price. I would say without going too deeply on the explanation, I would just say um, okay. So let me just explain the relationship, right? So it takes us back to the playbook of the Central Bank of Nigeria, any apex bank of any country, right? Um, why? So the relationship is if the interest rate is going up, price is supposed to be going down. So that's why you see if bonds are going up, they are saying stocks are going down. And not necessarily stocks going down because the metrics for stock is price. Do you understand? So price is going down. So stock will go down. So if yields are increasing, if interest rates are increasing, what it means is that um, the apex bank or the central bank of that country is tightening the economy, right? So when I increase interest rate, it means other cost of whatever it is will be increased.
Yeah.
So if you are a business person, I just need you to just understand it so you understand the relationship, right? If you're a business person, right, and I'm a central bank of Nigeria, and I've got I've got a cost, or for you to raise capital from me now, or you want to borrow monies from me, I'm giving you something as high as 10% monthly. That's times 12. That's 120% in a year. That's very tight. You see, for that economy that policy covers, money would not flow because guess what? It will dissuade companies from raising funds.
Yes. Yes.
So if companies do not raise funds, there would not. It would impact their top line. It would impact their bottom line because there's no money to produce.
Yeah.
There's no money to produce. There's nothing producing. Hence, no consumer buying. So you cannot expect the books of that business to expand.
Outperform,
So
yeah.
you see the relationship between the high cost with the business contracting. So imagine if there was now a low cost. I give you on 1% monthly. You are doing 60, you are doing 12% as opposed to 20%. Many businesses will be encouraged to get money. If many businesses get money, production will be high.
Yeah.
If production gets money, the bottom line will be impacted. Consumers will lend money.
Yeah.
So you see the yield going down, price going up. So if you understand that principle,
Relationship, yeah.
right, you can then understand, okay, so the government just released NPR 26.5%, I think last week or 2 days ago.
Like last week, yeah.
Last week. So how does this tell on equity if I'm strictly an equity trader? Oh, nothing concerns me with CBN. It concerns you, bro. Because you need to know that these companies, at the end of the day,
In Nigeria.
they are in Nigeria and they play with these guys.
Yeah.
So if interest rate is dropping or interest rate is increasing, what does that mean for Dangote? For Dangote refinery?
Yeah.
For these big companies? Do you understand? Right? If inflation is getting high or inflation is dropping, what does that also mean for this kind of asset class? So these are the so if you're always wearing that thinking cap of a macroeconomic analyst, you would always know how to jive. Okay, what's the interest rate looking like, and what are the factors driving liquidity constraints on an institutional level? Because guess what? It is these guys that drive the retail.
Awesome. That's an amazing stuff. And that's like I hope we get it because it's an industrial standard stuff. Yield versus price, very important. And also the macroeconomic conditions. If you are also doing US stocks, it means you should be looking at US macroeconomic conditions as well. Amazing. So one more question before we go to our quick fire segment, and maybe any question from the audience. What is one golden investment opportunity right now you think Nigerians are missing out on, if there is any?
Um, any, I think we are sleeping on investing in pool of investment, basket of investment. We like, oh, I want to invest in Intransact. I want to invest in one financial instrument as opposed to an indexed, right? Because an indexed instrument, right, is automatically diversified. Say US 30,
Yeah.
right? If I am investing in Nasdaq, right? If Mr. A in
Awesome. So, welcome to the quick fire segment. One, real estate or stocks?
real estate.
Ah, you've been, but not real estate since. Ah, okay, oh, no problem. Okay,
Real estate.
okay. Equity investments or debt?
I didn't get that.
Equity investments or debt? You're not supposed to think. You are thinking.
Debt.
Debt. Awesome. Debt. Okay. It can cripple people, but okay. What? Cash flow or dividends?
Cash flow.
Cash flow. Oh, okay. You're surprised, right?
Dividends is still cash flow.
Oh,
It's still
okay.
cash flow. Dividend is still
Okay.
cash flow. So I'd
Okay.
rather the whole bottom line than a portion of it.
Oh,
Do you get where
okay.
I'm coming from?
Yeah, definitely,
Yeah, that's
definitely.
where I come from. That's where I'm coming from.
Either own than
Yeah,
to collect
to
small.
collect. Give me
Okay.
everything, guy.
Important one. Crypto or gold?
It's gold now. Gold,
Mm.
like all time store of value is gold now.
Gold. Okay.
Crypto is dropping. Oh, should I show you the market?
No problem. After this. Okay.
Crypto has dropped to crypto has killed boys.
Then final one. Final one before we take any question the audience have. US stocks or Nigerian stocks?
Let's go for US.
US stocks.
Yeah, let's go for US.
But Nigerian stocks have more movements recently than the
So
US.
so the reason why is the relationship the relationship between I said something about Wall Street and Main Street, right? US has a better relationship. They are Wall Street. So whatever it is you see on the Main Street, within seconds you see it on the Wall Street. Nigeria, the time lagging, and before it will now your money has gone. Sorry,
Yeah.
your money
Amazing.
has gone. Do you understand? US, as you are predicting it, you are most likely going to see that your prediction next week. You see Nigeria, you will see it. It will happen.
Yeah, but before it happens, it's the issue.
You might cry. You
Okay.
might cry.
All right, amazing.
Yeah.
So that brings us to the end of our session. Do you have any question from the audience? Thank you. Yeah, thank you. So, any questions, please? Okay, go ahead, please.
Thank you very much for this session.
Thank you.
I want to ask a more individual focused question because this looks like a conversation for auto. So I want to bring it to layman. I want to bring it to our layman perspective. For me and my friend who came to learn something, I'm not running companies yet. My question is in twofold. You mentioned something about have liquid, eat in the morning before you are thinking. So when you've checked all these boxes, and let's say you have 100K to 200K disposable income or disposable money to invest in, what would you advise me as a newbie to start with? I'm asking, would you say bonds? Would you say T bills? Would you say stocks? Like, what do you think I should start with as a new investor?
T-bills.
T bills,
Yeah,
right?
T-bills.
Treasury bills, awesome. Second question. This is for companies now. You mentioned commercial papers, and it's interesting. I've been reading up on it, but there's not enough information. I've been tasked at work to understand the whole depth thing, and since you're here, I said, why not?
Beautiful.
Please educate me on how these CPs work, and do you think it's a viable way for Nigerian companies, businesses, startups to start raising money outside of VC and private equity and stuff? How does commercial papers work in short?
Beautiful. Beautiful. All right. So commercial papers are like debt. They are debt instruments,
Yeah, I saw
right?
that's what
So
I
at
saw.
the end of the day, bonds, T-bills, they're all debts. At the
Really?
end of the day, I give you money, you give me back on interest. At the end of the day, promissory notes, they're just different nomenclature. So if you collapse everything, right, and you collapse it to mean debt, you will understand. So CPs at the end of the day works on debt. So a company says, I want to increase or I want to raise money for, my working capital is looking really tight. So I want to raise money for working capital and sales revenue generated, right? Um, CPs are beginning, before it used to be very private deals,
There's
right?
not a
And
lot of information on it.
right, and it's usually the treasury department of a company that does the CPs. But now you see issuing houses, right? Brokers, dealers, registered and regulated by SEC, now doing CPs. You see CPs being listed on NGX, right?
Yes.
So it's typically debt, but it doesn't work like debt. It works like T-bills,
Okay.
right? Where there's something called discount rate, there's something called implied yield. But at the end of the day, what it means is, if I am saying that the minimum investment for this CP is 5 million, for example,
Okay.
and the CP issued is up to, for the sole purpose of this conversation, 10 million, right? Or let's say 100, 10 million. What's the minimum? What minimum did I say? 5 million. Let's make it one,
Okay.
right? One.
1 to 10.
1 to 10. And they say maybe the discount rate is 10%, hypothetically. What it means is that, how it works is, when I forward or when I bring my 1 million to the table, 10% will be, so it will be discounted. The face value of 1 million will be discounted. And yeah. So 10% of 1 million is 100K.
Yes.
1 million minus 100K is 900. So what I would pay is 900. I'll be giving 100. Do you understand?
Who is paying the 900? The company or?
Is me,
Okay.
right? For investment face valued at 1 million on a 10% discount
Discount.
rate, I'm going to be paying 900 as opposed to the face value. So the face value was just discounted to 900. So they
Okay.
would give me 100. That 100 is my upfront interest. Though. Don't spend it. Though. You have already,
Interest.
there's your money already, because at the end of the tenure, CPs are usually 360 days.
Okay.
T-bills 364 days,
Okay.
right? So for a CP, 360 days make a year, right? So you get to see 360 days, 270 days, 187 days. It is in that year. It is in that distance. So what it means, definitely, depending on the period that I choose, what it means is now is that, okay, I get 900. I give you 900. You give me 1,000. At the end of the tenure, the chosen tenure, let's say 187 days, you now give me 1 million.
So I'm the business. You're the one that is borrowing the money. To be sure, I get this correct.
Yeah.
In a CP relationship,
Yes.
you're going to be giving me 900K every month.
No, not every month. So you are raising 10 million naira, right?
Okay, yes.
You are raising 10 million naira. So
Okay.
it has been issued on the stock market, right?
Okay.
Even if it has not even been issued,
Yeah.
it was privately placed or sold to you, right?
10 million.
You have 10 million and you're giving the business,
Okay.
right? So usually for that relationship here, you are not going to be giving the business directly. There's going to be a financial advisor and an arranger that will
okay.
collect the money from you to give
Okay.
the business.
To give,
So
those are the brokers.
those are the brokers.
They're like agents.
They are agents. But a broker, technically is different
Yeah.
from an advisor.
Yes,
But let's
yes.
not complicate it.
Complicate
That's a
it.
broker. All middlemen, right? So I
Yeah.
give these guys 9 million naira. The 10% of 10 million is
1 million.
1 million. So you, as a financial advisor or arranger of that deal, will
Yeah.
collect 9 million from
From
you.
you.
Give me 1 million back. That 1 million is my
Okay.
upfront
Interest.
paid. So as opposed to the traditional asset class that I give you 10 million at the end of the tenure,
Yeah.
you give me 10 million and my 10%.
Okay.
My 10% will be given to me first.
Immediately.
So, yeah, but the 10% will be given to me off the face value
of
of
the
10 million
money.
I'm supposed to give you,
Yeah.
right? So you have already given me my interest
Yeah.
already, which
Yeah.
is 1 million.
Yeah.
So at the end of the tenure, so for this conversation, we're
Discussion.
saying it's
Yeah.
187.
Yeah.
So at the end of 187 days,
Yeah.
you will now give me 10 million.
Interesting.
So at the end of 187 days, I've eaten 1 million plus the calculation is backward. So they took it from the back to the
Reverse
front, but
engineered
it's
the
still the
whole stuff.
same calculation at the end
Yeah.
of the day.
Thank you very much.
Yeah.
I understand.
Thank you very much. Any other questions?
Any other questions?
Okay, go ahead.
Okay. Um. So there are a lot of I'm your financial body on Instagram. Some people are just I mean, they've noticed the bullish market in Nigerian stocks. So content creators are doing their everywhere, and they keep talking about Stanbic ETFs, or is it mutual funds now? So, and it's doing very well. So I spoke to someone who is interning at an investment banking firm, and she was explaining to me that if Stanbic is tracking the top 30 of Nigeria and another company is also tracking the top 30 in Nigeria, why is their price not the same? And that's because maybe an a correction is about to happen. So let me go straight to my question. Um, I'm investing. I'm tracking the top 30s, right? You explained something about Solana and something. So why would it be a safe investment, or what is the way to invest if I want to protect myself against volatility? In terms of, I want to invest and make money in the top 30, but then I also just want to be protected in a basket. That's what like ETFs are. So they are tracking this money. So if you invest in that ETF, it means you are part ownership of all the other 30s, but just in a basket. So what would you advise someone who is confused on individually tracking the 30 companies as to investing in just an ETF? Do you understand my question?
I think to expand.
I don't know. I do understand the question. So you're just saying which is better,
Yeah.
tracking the 30 yourself or outsourcing it? That's basically the question. Yeah.
Yeah.
Honestly, I'm a DIY person, right? But I would not want to use that to answer this question, right? If the financial advisor or the person that you're outsourcing to, the manager, if the manager is good, so at some point you would have to do your own work. It's either you do your own work on the investment or you do your own work on the person that will manage the investment. But guess what? I lose money. So I get to see people on Instagram. They forex is forex is you and God. Don't follow anybody and don't try to. Do you understand? So my point exactly is the way I've been able to also protect myself in forex as high risk as it is diversification. I am buying EU. I'm buying EU. I'm not going to be buying GU or AU. They have the same correlation. I'll be looking for another one that has a different, maybe gold. But still, even at that, we still have the same bullish traits with them, FX majors. So I would look for another, so diversification always comes, is always, so if Stanbic has a good reputation, if they are tracking top 30 companies by whatever standards they are doing, you can as well just do it. It's better than you doing it yourself because of course you have limited knowledge on how to go about it. But guess what? It would be nice of you to track it as they are tracking it. That way you would not need them again.
Thank you very much. I have one more question.
Okay.
So now, as a young Nigerian in his investment phase, um, in the past over 6 months, any money I get, I'm pumping it into not only Nigerian stock markets, but that's one of the questions I'm going to ask. And on it, so I'm not liquid at all. I'm not how do I put it now. Um, I'm eating.
What is going on
I'm
here?
eating, but like I think I want to see more liquidity. I want to. There's this psychology of being liquid, like of being liquid. When you just have the money chilling in your account, like it's different from summarizing all my assets and everything, it doesn't feel the same. So now, as someone who has put in so much, and I can see good how do I put it now, I've made profits. Do you understand? I've seen I've
I've seen it
enjoyed from
grow.
Nigeria. So I don't know when to, let me taste, like I don't know when to withdraw.
Yeah,
Like,
yeah.
do you know, I'm just giving them. I want to know when can I take from them. So
That's a beautiful question. And quite frankly, before you even make a move, that's the most important question you need to ask yourself. Because it inspires and influences the psychology going forward. As simple as that question. That question is not supposed to be asked in the middle or at the end. It's supposed to be asked before you even put your money in. And what's that question? What do I want out of this? Right? At the end of the day, if I am diversifying my portfolio, I am not going to be looking at one yield. There's going to be a weighted average yield. Because I was expecting that there's a board just so I just show how to calculate an average weighted yield. So if my portfolio hits, I'm saying I want to achieve say 27% weighted average. So what I'm saying is stock, mutual funds, bonds, whatever it is, everything, their performance is giving me 27%. So at the end of the day, if I want to if I want to rebalance it in a way that I need money, right? I would know I would know the level I'm going to drop my portfolio to. I will be aware. So the problem here is not you. It is you not knowing. You're not aware of even what you're looking at. So if you're not aware of what you're looking at, you don't know whether it's a good time to take, if at all, today or tomorrow. Because at the end of the day, I cannot tell you how much you need money than yourself. What forget all these things that we are doing at the end of the day. So at the end of the day, you need to understand, okay, what do I want to get out of this? Do I want something a little risk averse with between 10 to 12%? And if it's giving me something like 27%, I can rebalance the portfolio that way to drop to 10%, the 15% margin, I take it out. So it depends on what's your goal. What are you looking at? Is this stock? Am I looking to invest for a year, and at the end of the year, I collapse the investment, I exit? Or am I looking to go 6 months in, I exit? What exactly am I looking at? Or am I looking to grow my portfolio to weighted average yield? What am I supposed to do if I'm supposed to grow it? Because it's doing 20% now. I want to grow it to 30. What can I do? You begin to ask questions. You begin to know the asset class that you would do. Okay, blah 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 blah. I need to invest in this so that when he achieves a weighted average yield of 27, I can take 2%. So you already know how much you are taking and how much. Do you understand? And if the app that you're using is very savvy, it can still even tell you what is going on. So it still depends on what exactly you want, right? At the end of the day, it's your money. It's your money. Period. At the end of the day, it's your money.
thank you very much.
Also, so the point is you need to have a target.
Before you start the journey.
Yeah, before you start the journey,
Yeah.
because it will help you. It will help you.
Go back to the drawing board.
So many chop, Abby.
Yes, now. Are we with you?
Any
Yes,
other
killing
questions?
me.
Any other questions?
Maybe I still have questions.
Okay.
One more, so we can.
You want to ask?
Yeah, go ahead.
Thank you. So I don't know whether you were joking. Me, I'm serious. I want to make $1 million in a year. $1 million. So I want to wait now. Wait, let me ask the question. So I want to ask truly. Have you seen any Nigerian from Nigeria achieve this kind of milestones? This is a genuine question with Nigerian reality.
Okay, so I won't answer this question like directly.
Yeah,
I'm just gonna be telling you what
Yeah, how is
I
it
have
possible?
I have garnered
Yeah.
over. If you want to make $1 million, you would need to have a lot more than $1 million to make $1 million at the end of
Okay.
the day, right?
Yeah.
Yeah. Um,
From investment perspective.
from an investment perspective, yeah.
You can't cash flow your way to $1 million.
I didn't get where.
Can't you cash flow?
You can.
Exactly. That's what I'm even going. That's where I'm going. I just stated that as one option. Right? If you want to make $1 million, then what you're telling me is that you have more than $1 million, and we can make $1 million off of it. One option. Second option, you don't have capital to make $1 million. You want to make $1 million. I look for somebody that needs more than $1 million. I look for somebody that has more than $1 million. I do like this. You're laughing. I'm giving you. Don't laugh. I'm
I'm
giving you.
listening.
I do like this.
Yes.
I get commission, free money, but I don't know if that free money will be up to $1 million. But it might hit some thousands in dollars. Right? That is one.
Can you
Second,
do that illustration again? I'm serious.
you need money.
Yes.
You need money. My guy here has money.
Yes.
I know him. You don't know him.
Mm.
I am the only link between both of you.
Yeah.
You probably need $5 million or $10 million.
Mm.
Right? This is typically what my company does. This is typically what my company does. Private deals.
Yeah.
You probably need like $5 million. This guy has $10 million.
Yeah.
And commission is like 2%, 3%. I don't have money, but I know somebody that has money, and I know somebody that needs money. I do like this. Before you know it, I've hit it.
Yeah.
When I wash and rinse, severally, right? So that's one. Secondly, you build a business,
Yeah.
right? A business that does number of units, right? If you want to make $1 million, you build a business. There are so many sites. There's this particular site, right? No. Don't be sporty, you. There's a particular site where you sell your items. I've forgotten. No, not Jumia. No. It's like it allows. It's like an e-commerce.
Shopify.
It's more like Shopify, but of course, like Shopify, right? Shopify, right? So if you want to make $1 million, you have a site. You probably do not need to get the inventory. You just list it, drop shipping. What we normally do on WhatsApp, you bring it to your own bespoke, custom-made site. You make it. You list. You go to your guy in China. Say, okay, when I get this, or even go far. Just find somewhere that does good inventory, right? It might be wristwatch, luxurious item, because if you do normal domestic, you might need to sell more to make it, right? And then you might have to spend more on marketing and whatnot. Then you make that much. Of course, the reason why I'm saying this in particular, because you're going to be leveraging on technology, right? Which would put all of your business in one ecosystem, exactly, and you can compound. It's easier when you just, and your mind is not cluttered. Yeah.
Amazing. Thank you very much for listening. Oh, one. Okay, I hope it's a short question. Very enough of time.
Are you passing this?
So much of this program. My question is that okay. You made mention of diversification. So I want to ask: is it okay to diversify in low risk investments and high risk investment, or we should diversify in low risk investments across?
That's a good question. It's a good question, honestly. And I would say if it's a low risk investment, you can diversify, but you might not be as heavy on it.
Yes, sir.
Because it's low risk.
Yes, sir.
T-bills, diversifying on T-bills, you will not lose your money.
Yes, sir.
Except you just want to be too sure of yourself.
Yes, sir.
Right? But high risk is definitely, if you're putting all your resources in one basket for high risk or
Yes, sir.
medium risk, you will cry. And I won't be there to part you. You'll cry. You'll cry well. So yes, I would advise diversification on medium and high risk. High risk, don't go there.
All right, sir.
And high risk. The only high risk here is forex.
Yes, sir.
Don't go there. Don't go there. I'm serious. Don't go there. The game, the veil is off. The game has casted. If you don't know it, you don't understand. If you know, you know. The veil is off. The game has casted. So, high risk forex, I wouldn't advise you to go there. There's a lot going on there. You don't need it.
Yes, sir.
Right? When T-bills and state bonds can give you peace of mind. Right? Why
Yes,
are you? Do you want to show me that you can think? Why are you in forex? You want to show me that you can reason? You can analyze. Is that okay? The money that will come out will show me that, oh, this boy, he thought so hard before this money was made. Then I'll do like this for you. Ah, guy, this money he's telling me that you thought well to make this money. Check me. Do you understand what I'm saying? So yes, avoid high risk,
All right, sir.
medium, CPs, bonds, T-bills, and if depending on how much you have, private deals. Private deals. Look for an investment bank that has good reputation. Tell them to give you their pipeline of deals, right? That
Yes,
you
sir.
can invest in. As low as one, you'll be amazed. People are looking for 10 million. People are looking at that your 1 million, 2 million that you will give that private credit company that we use to put in his balance sheet to make money, and he will now give you your yield proportionate to the portfolio. Do you understand what I'm saying? So
Yes, sir.
just have investment banks, because you never can tell. Money will just come, blah 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 blah. You go and buy GLE. You go and buy GLE when you can buy 2 GLEs when you invest that money. Do you understand? And yeah, it's still private deals, and is linked around agro commodities, right? There are deals that are off my table, right? That does alpha returns way more than the NPR. Private deals, they are private deals. Big companies, they need money. You give them, they go and do business with the money. They get revenue. They give you like 40%. That 40% might be like 35. That 40% might be equivalent to like 35% annual return. Private deal, quiet. It's only you and God that knows, nobody else. Those kind of deals, yeah. Yes, now.
All right.
All right, thank you, sir.
Yeah,
Private
thank you
deals.
very much. So, in one private deals, of course, an investment banker is sitting right in front of you, so you can have a chat with him. He runs Silver Oak Partners, the managing partner, and he's an investment firm, and they do a lot of private deals, trust me. Awesome. So, thank you very much, Mr. Gbenga, for being with us, and thank you, our listeners, for listening and also for engaging with your questions. I really appreciate it.
Thank you, guys. Thank you. Thank
All right,
you.
let's take a quick break, please.